Hey guys, today I want us to do a little demonstration. How do we put everything we've been learning together when we are looking at the markets and when we want to place our trades? First thing to do is to go to forexfactory.com, or we could use investing.com for the fundamentals. Right, just to see what news are up ahead. That is all. Okay, for me, I like to check it to know what to avoid. Okay, so for today, Tuesday the 3rd of October, we have news that will affect GBP coming up by 12:01 a.m. that has already passed. And then we have a news coming up that will affect JPY 12:50 a.m. already passed as well. And then we have CNY bank holiday. Those are the news for earlier today. We had news affecting Australian dollar, news affecting Japanese yen, news affecting Swiss franc, all of them. So they are there with their times, right? So you know which which assets would have volatilities at these times. So personally, the way I use it is any pairs that have any one of these currencies, I tend to avoid them around the times that those news are coming out, because the news make the markets unpredictable. So I like to just watch. After the news is released and all that volatility and all that shaking is done, then I come and look for opportunities after that, because it just makes things easier for me, right? So Forex Factory is easier to use because when you come up, you see everything. And if a page opens that you're not understanding, just look for news and tap it, and all the news concerning all the different assets that are coming out for that day or for that week will just show up. Okay, that's the idea. That is how I use it. Tomorrow's news, Wednesday, we have a lineup of them all the way. So if you are looking for opportunities on any assets, any pairs that would be affected by any of these news, you can note what to expect. You can expect a lot of volatility at those times when the news will be coming out. All right. So after your fundamentals, then you come to the charts, and then you check what is the most current trend. That's the first thing you want to do. What's the most current trend on the bigger time frame? All right, so you start from like daily time frame, right? This is the daily time frame, right? The most recent is what? It's a downtrend. We have lower highs and lower lows being created. So we have a daily downtrend being created here. All right. Now, from what I see here, I see that there has been a break of structure to the upside. Right, we have lower highs and lower lows being created, right? And then here we had a lower low, lower high, lower low, and a high that was higher than the previous high. So this is a break of structure, and mark that out. And when there's a break of structure, you know that there is always a what? There's always going to be an order block right there. So the last bearish candle here, so there's another block there. I would wait for price to come there and then buy from there, right? That's what I would do. But in the meantime, price is printing lower highs and lower lows on the way to the order block. So there should be sell opportunities here. Let me show you how we would have played one or two of them. I actually took a number of these trades because if anybody knows anything about harmonic patterns, you'll discover that there is a Gartley, it's a bearish Gartley harmonic pattern here, and there is also a bearish shark here. Right, so this was sometime in last year. I think I played this, took this trade. The idea is to take it all the way down to this other block. Also played this trade. I think I got the second entry around here, if I am not mistaken. Let's see. Okay. Right, so it was marked out. But I'm trying to do this on a fresh chart so you can see it from the beginning. But I think, alright, here, right there, then another one here, none of that. Well, I'm using a clean chart so we can do the whole thing from like the top. Okay, so where is it? Yeah, so there will be another block here, but right now we want to sell. Okay, so how would we have done the thing about how to put everything we've learned so far together? First, we acknowledge that this is a downtrend. All right, so what do we see? From up here, we can already see that there was a smart money cube here, or a hidden order block right there. So what we'll do is use the rectangle tool to mark it out and extend it to the right and wait for price to come back in there. Usually we will just take maybe 50% of the body of the candle, right from the open to the close, as our entry. So I'm using my Fibonacci with just 50% marked. That's the 50%. So place the sell right on the 50% here. Place the stop loss on top, at the top of the wick of that candle, right? And then the take profit will be at least this low, but of course you can see that it went much lower than that. Much lower, all the way down there. So that is one way we would have played this, all the way from the daily time frame. Okay, what else can we see? We see an imbalance here. Right, an imbalance here, and we talked about premium zones, right? So if you take high to low and you draw the Fibonacci retracement of high to low, you discover that for this one, price came all the way above 50%. So this smart money cube was above the 50% of the high to low, so it was in the premium zone, and there was a smart money cube in that premium zone, off of which that trade was taken. Okay. Now, if you look at the next range, high to low, there is a smart money cube here. There's a smart money cube here, and there's an imbalance here. Now, it means that this region you need to pay a lot of attention to it, because the smart money cube, there are even two of them, there's an imbalance in the same area. So you want to pay a lot of attention to that, because we have two of them coinciding in the same area. If you draw your fib from the high here to the low here, the imbalance is around 50% and above. The smart money cube are also above the 50%, right? So what do we do? I would mark the imbalance, just the imbalance, and at about half of that imbalance, that is where I'll place my trade. 50% of the imbalance from up here to here, I'll place the sell there, put the stop loss above. The candle that has the imbalance, the top of the candle, the wick of the candle, that's where I'll place the stop loss. Okay, and then price went all the way, right? Very simple. You can even take your trades from the daily time frame, right, without any need to drop. So I'm just trying to show you how we could have done these things. Now, of course, these things I'm saying apply on every time frame. Every time frame. You can decide to drop the time frame and check what the trend is and apply these things. It doesn't matter the time frame, it works. Alright? It always works. If we look at this high to low, you discover that there is an imbalance here. It's an imbalance here, right there, right? See the way price is just literally dancing to our tune. Take the fib of the high to the low. It is right there, of course. This 50%, we just tapped it and dropped, but you see that it came back to above the 50%. Right now, there was no smart money anything around the 50%, so I wouldn't have taken this particular trade. Okay, but this one now, yeah, I'll take this one. Besides, it's also a harmonic pattern, so, and harmonic patterns have a 70% chance of playing out. So if you have that, and then you have smart money concepts, premium zone, and all of that backing your trade up, plus the fact that structure is in place as well, and structure is being respected. Now this is what we call a high probability setup. The chances of this failing are very, very slim. Very, very, very slim. So what do we do? 50% of the imbalance, right? Place your sell at the 50% right there. Stop loss above the wick of the candle that has the imbalance, and voila, 5 times anything you risked. How cool is that? So from here to here, we've had how many opportunities? There was one here, another one here. This one was not so clear, so I wouldn't have taken anything there. A third one here, so we have taken 1, 2, 3 trades between when they started and here. Simple, right? That is how we put these things together. Thank you so much. We would continue in our next class, taking us through examples.